To me, it's like, man, it's like, you've taken a lot of risk to get where you're at today. How do you mitigate some of that stuff? And at the same time, take advantage of legitimate codes out there passed by Congress that allows business owners, if they're going to risk finance it, do they want to use pre-tax dollars or after-tax dollars?
Yeah.
And it's the pre-tax dollars that can make all the difference.
Not every battle has a success story, but every success story has a battle. Hi, I'm Tia Minzoni, CEO and co-owner of luxury private jet company Stella Jets, a serial entrepreneur, a survivor, and your host of the Fight to Fly show. On Fight to Fly, I sit down with the world's highest achievers who share their incredible stories and lessons they've learned on their own fight to fly. Expect to be inspired, entertained, and motivated to break down the barriers between you and your high-achieving success story. Come back each week for a new episode and be ready to empower yourself to give your dreams wings. Welcome to the Fight to Fly show. Welcome to this week's Fight to Fly show. This week, we're sitting down with Van Carlson. I met Van a few months ago, and one thing is we both have a love for traveling by private jet, no shame there, but also a love for helping businesses. And when he told me how he helps businesses, I was just like, everybody needs that, and I wanted to get him on the show. So thanks for coming.
Yeah, thanks for having me, Tia. Really appreciate your invite down to Dallas down here.
Yeah, you have to start spending some more time in Texas now.
Yeah, I'm happy to. I love Texas.
Yeah, lots of people that you're going to like.
Idaho, I'm from Idaho, so Idaho and Texas got a lot in common. So.
Yeah, for sure. So when you and I met, we met at another event out in Vegas, and you got to talking about what you did, and I thought, this sounds great, but it also sounds like you know what you're doing so well. And it's like, it sounds great, but I can't repeat this because you've obviously learned it over many, many years. And there's a lot to know, but every business owner needs to know it. And so I was like, man, I hope he gets to talk to every single person I know because I want you to help them. Can you, definitely not me, but can you explain kind of what it is that you do to help businesses?
Yeah. Been a risk manager for a long time. And it's one of the things that gets dismissed a lot by business owners, especially entrepreneurs, right? I mean, it's always upside. And risk management is a strategy that, you have to play part of your business today. I mean, we take a lot of risks to do what we do. A lot of businesses do. And that's one of the things that, unfortunately, what's happened over the last several years is traditional insurance carriers are either limiting exposures out there that are new to the business world. A great example would be brand protection, right? Where it takes many years to build up a good, reputable brand, but in today's world with social medias and everything else, it takes seconds to destroy. Well, that's a risk to the business. Mm-hmm. You can't buy traditional insurance for that. That is something that you're retaining on your own books, your own balance sheets. And what we call that is an unfunded liability. And then it just comes down to risk financing. How do you want to risk finance that? Do you want to use pre-tax dollars or after-tax dollars? And unfortunately, a lot of business owners don't know that Congress actually addressed this issue back in 1986. Very similar to what's happening today in the insurance market, where business owners are finding themselves more and more it's very hard to find coverage that they need, and or they're being excluded, or it's too darn expensive to buy, or it's just simply not there. You're seeing a lot of insurance carriers pull out of the market, and that really led up to 1986. It took a couple years to get there before Congress took action, but a lot of business owners back in the 80s were almost in the same market we're in today. What really drove it back then, though, was crop insurance. Farmers were finding themselves self-insuring crop insurance. Mm. So Congress got together and said, "Hey, we're going to form an incentive. If you're going to have self-insure this risk, how do you do it in a more tax preferential way?" Mm. And that's through an 831B tax code. So we administer 831B plans, no different than your 401k administrator does. You can put up to $2.8 million a year in this plan every year. So you can take an expense out of your operating company, no different than you're taking the expense when you insure your building. Mm-hmm. And now you're able to expense this premium out of your operating company. You dump it into an 831P plan, and it doesn't pick it up as income. So now you're able to build up those reserves and surpluses and act like an insurance company. This was the advantages. The advantages of owning an insurance company are very, very, a lot of advantages to business owners. There's a reason why Warren Buffett owns a lot of insurance companies. There's a reason why big companies UPS owns more insurance companies than probably anybody else out there. Mm. But you as a consumer, you just don't know about these things. These are I would call them institutional tools.
Mm.
But back when I got involved in this was really in '08. I was running a pretty successful property casualty agency, but when the Great Recession hit, most of my clients were business owners by then. When you start a business, you wear all the hats, and you give those hats off. And the one hat I kept was working with my business owners. And I just loved going out with and talking with them. And unfortunately, I saw a lot of them go out of business. And it's because they knew accelerated depreciation. They knew why buy a jet, so we can depreciate it down.
Right.
The problem is those things, a lot of times they just finance that debt, but they were able to take a full depreciation on the equipment, or at least a large part of it. And all they did was bet next year was going to be better than this year. And that's a form of insanity, right? I mean, and this is when it really became obvious to me that there's a better way to manage the overall risk business owners take from a financial standpoint than just listening to a CPA to tell you to go, hey, I joke about it, but it's true. I love the fourth quarter, and you probably like the fourth quarter to some degree too, right? It's like, oh yeah, my CPA says I'm going to owe a bunch of money. I'm going to buy another skid steer and 2 more trucks. What's it going to cost to insure?
Right.
Like, well, I'm making more money. The sales guy made more money.
Right.
Life is good.
Right.
And then here comes '08. And unfortunately, I just saw a lot of those guys, get auctioned off. It went really bad really quick, especially in the trades and the general contractors, anybody surrounding with residential housing. But that's when I really became a believer in it. Now you fast forward to COVID. And one of the things that we've been able, we call ourselves a 16-year overnight success story, but we have over 800 plans now around the country. We have about 125 agents that represent our products. But when COVID hit, I mean, that was so one of the things that we're telling our business owners today is like, well, were you dependent on the PPP? Did you need ERC? Did you need all those things that the government provided to you? If you did, I understand why, but now that you're aware of this code, you should have your own PPP plan. You should be able to self-fund it yourself and not be dependent on the government the next time. I don't know if we should, or we should have in the first place, but it is what it was, right? I mean, It happened.
Yeah.
Now, how do you change that outcome? And it's really taking control of your business.
Yeah. In
a lot of ways, not just, always trying to grow it and all those things, but it's really to mitigate the risk on the back end from things like COVID-19. And believe me, we can talk about, unfortunately, I'm the guy at a cocktail party that can be a real Debbie Downer. I'm just going to tell you that right now. I know we're going to dinner tonight. So I have a tendency to talk. Yeah, exactly. Unfortunately, I can, I'm an upside guy too, but I can talk about the downside pretty quickly too. And now this comes from a risk management standpoint.
Yeah.
And it's just talking about the things that could go wrong. And it's I've been doing this for almost going on 30 years. And unfortunately, I've been in a lot of hairy situations where, I saw where insurance made a huge difference for that client. Without it, it would have been, and then I also saw where insurance didn't cover that client. I was the messenger, right? I had to tell it, hey, you're not going to be covered, and here's why. And it's like, and then of course you always heard, well, I always pay these premiums, and as soon as I make a claim, you guys don't want to cover it, or you want to cancel me. Yeah. And that's really the environment we're in today, unfortunately. Texas it's got some challenges with insurances, coverages, especially on the coastlines. And all that fun stuff.
You're really giving people the power because, a lot of businesses would not have survived without PPP. What if the government decided not to do that? They had no control.
So the reason why the government had to step in on that, you have a business interruption policy on your traditional insurance. Like if you had a fire in your building, you got displaced, business interruption triggers ends, right? So it's going to cover you any loans you had, it covers your employee payments, it even covers your salary as a W-2 of your own corporation. That's business interruption. That's a direct loss on the property. What happened with COVID is it was all indirect loss. So there was a specific language in the policy. Like, for example, if down the road here, somebody hits a power pole and you don't have power here and let's say you were in refrigeration, whatever, and you lost power. That's an indirect loss. It didn't happen on the property. Now, if somebody hit your power pole right in your parking lot, you can get covered. It's that kind of it's that finite details that you start to really matters what a policy says, right? And again, I always tell people if you have a hard time sleeping, go read an insurance policy. You'll fall asleep right away. So that's the reality of this stuff, right? Yeah. But to me, it's like, man, it's like you've taken a lot of risk to get where you got to where you're at today. How do you mitigate some of that stuff, and at the same time take advantage of legitimate codes out there passed by Congress that allows business owners if they're going to risk finance it, do they want to use pre-tax dollars or after-tax dollars?
Yeah.
And it's the pre-tax dollars that can make all the difference. When you look at about the PPP, in the first month, so PPP in March of 20, by April, everybody's pretty much shut down. Just in the month of April, close to $500 billion would have been paid out through business interruption.
Wow.
Well, as a country, we collect about $250 billion annual premiums. So you can see where traditional insurance carriers will never cover those.
Right.
They're just too catastrophic. It's like terrorism. The reason why the government backstops terrorism is because when it hits, it's detrimental.
Yeah.
Crop insurance is now backed by the federal government. FEMA is now backed by the federal government. At some point,
I'm trying not to make a joke about you comparing insurance to terrorism.
well, terrorism insurance though.
Oh, okay.
Oh, it's funny. Well, you might. I don't blame you for not knowing this. But 9/11, when 9/11 happened, they were saying it was an act of war. Well, act of wars are completely excluded under insurance policy. So all of a sudden, it became a terrorism act, and it was a gray area.
Yeah.
And some insurance carriers covered, most insurance carriers stepped up, but they were like, hey, we're not doing this again. And that's when the government came in. So they call it TRIA today, where you have terrorism coverage on your policy now, but it's backed by the federal government.
Yeah.
But at some point, can we get off the government's dime here?
Right.
I mean, if we're going to take responsible for our business, we don't want government interference and lack of, over regulations and everything.
Sure.
At the same time, they give you the ability to have a code to go handle this on your own. And so a lot of it's just awareness. So again, I appreciate being on your podcast because, it's mostly just bringing awareness up. And it's not a silver bullet by no means. There's rules and regulations. Shockingly, the code's been abused for other reasons that was not intended to. But, there's a lot of smart people out there who will find ways around and through things. And they did. Sure. It was mostly used for estate tax planning. And Congress made some adjustments to that back in 2017. But today, though, it's just like, guys, it happened. COVID happened. It was a real thing.
Yeah.
How are you going to change the outcome going forward?
I have a question for you. So you mentioned it's similar to putting money into a 401k.
Yeah.
So what is the benefit of putting money into having your own insurance versus just saving that somewhere where it'll draw interest? What's the difference or the benefits?
Yeah. So it's really a difference between, like I was being tax deferred, or it's either pre-tax or after tax. The problem with after tax is, it's really your retained earnings in your company that you're utilizing for cash flow. So all of a sudden you have an unexpected expense hit you. You're going to draw down out of that cash flow, right? That's exactly why PPP had to come in, because that's what we would all have done as business owners, because we still had to pay the mortgage, we still had to pay the lights, still try to keep our employees payrolled, even though we didn't have any income coming through the front door. You would draw down your cash flow, and within certain months, everybody would have gone out of business, and that's why PPP had to step in. The advantages we'll bring to you is if you have taxable income in your operating company, and we can create additional expense in your company, and then drop it over here, and then that vehicle doesn't pick it up as income, that's pre-tax, tax-deferred income out of your company that you would have just gave Uncle Sam anyway. But now you're building up your own reserves, your own surpluses, and your own ability to take care of your company when traditional insurance carriers aren't going to cover you, or you're going to have such small sublimits. I mean, one of the things we didn't even hit on is cyber today.
Yeah,
we've hit on brand. Let's hit on supply chain risk. Look at supply chain risk today. We are a global economy. If I can't get a part out of China right now to make my product, and I got to pivot somewhere else to go get that, and we had this happen during COVID. We got some great videos on our website actually that kind of dives into this, where it's like, here's the cause and effects. And if you're not prepared for it, and two, if the economy takes its step back or some other things happen, are you prepared for these things? And you can't prepare for everything. And like I said, it's not a silver bullet by no means, but it is a tool in the toolbox. For the right client, it's a great tool.
Like a lot of people say, well, I pay these premiums and then I'm never going to use them, and the insurance makes all the money. And so, what happens with that fund that a business is building if they don't ever need it?
Oh, yeah, great question. So, one of the things about traditional insurances, I think traditional insurance does a great job. Covering your building does a great job. General liabilities, work comp, slip and fall. So we can replace those traditional insurances as well through this mechanism. However, you got to be paying typically north of $400,000 of traditional premiums. So we have a way to replace your traditional insurance too. But my clients, for the most part, don't pay nowhere near that level. However, there's a lot of risks they retain. But to your point, as they build these surpluses up, it is a C corp. and we have this going on right now with people when they sell their businesses. We'll allow you to keep that thing open after 3 years, your business. Now, depending on even the transactional risk when you go to sell the business, and do I have risk of that because I'm holding the note and all those kind of things? Do I want to keep this bucket of money open in case, God forbid, I got to go, somebody's suing me or whatever? You have this bucket of money to work with. And then, again, you're keeping it tax deferred. You just have more money to fight the fight, right? But eventually, I don't have an operating company anymore. I have no need for this vehicle anymore. You just simply shut it down, you liquidate it, and it comes out at capital gains. So down the road, it's no different than an HSA. If I don't use my HSA plan and I keep funding that every year, and I, thankfully don't get sick, that does turn it into another retirement vehicle. Right. For business owners or for anybody that has an HSA plan. So it's that kind of a thing that happens. And I tell clients all the time, man, I hope that happens, because here's the thing about insurance, unfortunately it's never a good day when you need one. I can't really think of a situation where now I've got to call my insurance guy up or my insurance company and say, hey, is this covered? It's not, you're not having a great day. Yeah. Again, I can't think of anything that you're having a great day when you need insurance around, right? So, and the things that we're looking at for you could be very detrimental and catastrophic to your company. We call it low frequency but high severity, and those are the things that can wipe you out. Yeah. And so, but like I said, hopefully none of these things happen. And you go down the road, you sell your business, and eventually, you shut this thing down, and you go off to the sunset. And it does become another tax deferred bucket of money for business owners again that is solely for their purposes, not for the like a 401k is for you and your employees, right? This one's strictly for the owners, the risk takers, the guys that took an idea, ran with it, and turn it into a profitable company. Right. Not easy to do. And I think a lot of times business owners, we kind of say, oh, shucks, we didn't do anything, right? But, the reality is you did do a lot of things, especially if you're a small to middle market business owner where you're competing with large companies. Large companies do these tools all day long. The advantages they have, but they have a fleet of attorneys and a fleet of CPAs, and they're not afraid of anybody. I work with guys that, may only have one CPA in the whole darn firm that they're working with. Right. And he's still trying to figure out the 2017 Tax Reform Act, not alone an 831B tax code. Right. Those are the guys that typically I want to work with. And we have a lot of CPAs that refer as business. And, but we do, that is a challenge for a lot of our business owners. There's real risk out there. And and if I would say anything, the world has gotten much more complicated, due to this way our commerces are happening today. When I look at e-commerce and all the things that we do, and then the warranty stuff. One of the things we haven't even hit on is warranties. To me, is one of the most unfunded liabilities on books today, because in order to compete, in order to have customer satisfaction and all those things, the warranties are pretty broadly given. And unfortunately, they're really, that's one of the largest unfunded things on your books, especially if you're in the subs or anything like you're selling or manufacturing or distributing a product. You're the one honoring Costco's warranty. It's not Costco honoring that return policy that, hey, I just didn't like it after using it for a month, right? The person that did the distribution or manufactured is the one that's honoring that. They're the ones eating that. Yeah. It's not Costco eating that, right? Yeah. I think there's a book that says, I think the book written is How Many Companies Have Been Ruined by Costco because of that return. Yeah. Wow. But when you go into business with those guys and you want to get on their shelves, you got to play by their rules. Yeah, it's a risk, again, just like you're talking about, calculated. And just to take a little bit off those profits that you got from selling their products at Costco and parking it off to the side. Yeah. And you're hedging against that now, right? And not only is it good risk management, it's just good business. Yeah, for sure. So for people out there now, let me back up just a little bit. A lot of what I've done in my career is business consulting. I do a lot of marketing, but I can bring you 1,000 customers an hour. And if your business is not set up to handle those, then you're not going to make any money. And it's somehow going to be my fault as your marketer, right? So I, indirectly got into looking at logistics and doing consulting and making sure if I'm bringing you clients that you are set up to handle those clients. You have the amount of product you need and the logistics and all that stuff. And I've seen so many businesses and helped save some businesses that they were like, if they didn't improve their business this month,
they were going out of business,
Oh, yeah,
right?
it's crazy, huh?
Like
Even
there's
when
no
they're-
6 months in reserve or anything like that. And I think that's one of the reasons why when I started hearing what you do, I was like, oh my gosh, everybody needs this. Cause I've literally been on the ground floor with these owners and it's their dream or it's their family company.
Turns into a nightmare.
And yeah, and they've got 1 to 3 months left. If it doesn't improve, they're going to lose it. And it's devastating to them. And so that's, I think there's a lot of people out there that just don't know. And I love that you're educating on this. And I hope that you can touch a lot of business owners with this, because I do think that it's really, really needed.
Yeah, absolutely. I mean, that's one of the things I became really passionate about in '08, because I saw a gentleman that had 7 or 8 of these plans going into '08. And he was the one that was showing up at the auctions buying raw materials for 5-10 cents on the dollar. Why? Because he was the only one that had the money.
Yeah.
And it's funny. It's not funny, actually. It's going into 24, right? Mm-hmm. Everybody thought there was going to be a pullback. Commercial was going to get slaughtered. And what I witnessed, a lot of people were pulling back cash. Mm-hmm. And they were just hoping. Because they had the cash to go do something with it.
Yeah. Buy when there's blood in the streets kind of thing.
Exactly. Yeah. And that's great planning, but when everybody's thinking the same thing, it really doesn't work out that well. But
dang it, Warren Buffett, stop telling people that.
Yeah, exactly. But so at the same time though, it's like, yeah, this is a hedge against all that stuff. And the fact that you can use it as a pre-tax dollar basis just puts you in a hell of a lot better position. And the reality is it also puts you in a great competitive position. If you're in a highly competitive skill or a trade or industry, to do our program gives you a competitive edge. I've seen it over and over again, where business owners, even if they've piled up money in these things in those good years, it affords them the ability to even take on more risk, which, again, you're hedging. This is a big company tool, and you can see that why it is.
Yeah.
But also I think business owners, the mom and pops, the small to middle market business owners, they need to be thinking the same way, because that's who they're competing with.
Yeah.
Right. And so, education is power, as we know. And again, just bringing this, it's been on the books for 38 years.
Yeah.
And a lot of your listeners and a lot of people I still talk to this day, I've never heard of it before.
Yeah.
And so we're just trying to get the word out on this. We've got some really good leeways with Congress right now about talking about this becoming the new PPP plan, that we probably shouldn't be writing blank checks like we did. We can't, we don't know all the consequences for that still yet to this day, in my opinion. But if this is a legitimate code that's been passed by Congress almost 38 years ago, make it a normal business practice. Okay, IRS doesn't like it, or the number, Democrat, Republican, it doesn't matter. Can we just come to consensus on this? And maybe I'm asking too much for that, but to say, hey, we'll give you the opportunity to do this as a business owner, to build up your own PPP plan.
Yeah.
Because I really feel, I hope to God, right? We never have another COVID. We don't have a COVID-20 or COVID-18. I'm not really sure how COVID-19 ever came into existence, but
you're losing me on the numbers here. I don't know.
But you know what I mean, though. It's like, maybe there will be another COVID in our lifetime. I hope not, but we know it happens. Yeah, exactly. We know it happens, but it happened. Yeah. And so anyway.
And nobody would have ever well, I don't know. Maybe there are some people. I wouldn't have never expected that to happen. So for me now, I'm like, something so unexpected has happened several times in my lifetime, right? We never could have guessed 9/11 would happen. We never could have guessed COVID would happen. And so we weren't prepared for it. And whether or not there's another one of either of those, there could always be something that we can't even imagine right now. And I think now we're like, okay, there's all kinds of things that could happen. Be prepared.
The world's complicated, extremely complicated, and especially if you own a business today. It's too unpredictable.
Yeah, for sure. Well, I appreciate you educating everybody. I think there's a huge gap in education with business owners, from working with, Fortune 100 companies to working with small businesses. The biggest gap is not money, it's education. And so I appreciate that you're out there educating people on this and helping business owners. How can our listeners get more education, get in touch with you and your team, and find out how to implement this for their businesses?
We design Bree, my marketing director, 831b.com. So we happen to own that domain.
Okay.
She procured that domain for me.
Nice.
She did a really good job for me.
Yeah.
But yeah, we own 831b.com, and it's really an educational website. And there's some animation videos that kind of go into the case studies. You can always ask for case studies, or upon request. My email is van@831b.com. Reach out to me directly. Happy to direct you. Like I said, we probably, like I said, we have about 130 representatives around the country, and then I have a pretty strong sales team internally. And we're tasked with educating those business owners and also the trusted advisors. I mean, we work with CPAs, we work with attorneys, and we work with financial planners and property casualty agents for that matter too. And so they're always out, bringing clients to us.
Yeah.
But if you're a client out there that has these issues, like I said, we're happy to work with their trusted advisor as well. So
awesome. Well, thanks for coming on the show. It was great to have you.
Yeah, it's been great. Appreciate it very much.
We'll do some more. Next time we'll have bourbon and then do some fun stuff.
Yeah,
no,
there
I'm
you
just
go.
Kidding. All right. Well, thanks for coming on the show today.
Thank you, Tia.
All right. Thanks for tuning in to this episode of Fight to Fly. And don't forget to subscribe for even more motivational content and lessons from high achievers. And be sure to follow Fight to Fly on your favorite social media platforms.